Hey guys, it's Kieran. I'm just going to do a quick full market update. So I know a lot of people are concerned about this news, specifically about Michael Burry placing really bearish bets and shorts against the SPX and Nasdaq 100. And of course, a lot of people will naturally be making a big deal about it because we had that 2008 financial crisis. There's also that movie, The Big Short. And effectively, this triggers a lot of emotions and a hurt for people. And of course, there's that element of people probably just putting it on social media like YouTube to really evoke fear. But it's very important to look at things rationally as well. And of course, it makes good for headlines, of course, to get a lot of views. But let's look at the charts though, and that's just what we specialize as technicians of the chart. So looking at Bitcoin price action, it has been rather low volatility and period for this last couple of weeks. We had this baseline support region here. So this demand zone here, 29.6 to 29.8, and we broke below that. So this was effectively a change in character because we had this clear uptrend. We broke structure here, and then higher low, and then took out the structure. And then recently we just broke down this low here. So now we've just been consolidating here. Of course, we had that wick here, just that move up like this, and we took out some stops. It's very, very normal. Stuff like this happens all the time. But we're not back in the woods yet, out of the woods yet. Because the thing is, essentially, I would expect if we are going to complete this uptrend, we would have to get another push up, at least in the next couple of days. And one thing that's noticed is that this market inefficiency or imbalance. So there's a wick here and a wick here. You can see there's a huge imbalance here. Very often, from experience, these imbalances, if you draw Fibonacci like this. So I'm just going to draw it to there. I'm just going to go and put the default discount premium fib. So looking at this, usually imbalances, they recover at least to the 0.5 Fibonacci, so around 30.7k. So perhaps we might get a tag of that, and then we'll see if we continue this much forward downtrend. There's also an untapped point of control. So an untapped point of control is essentially a high volume area, so around 31.2k. So that's something I'm looking at as well. And of course, we have this much bigger macro view here. So this is like essentially you've got a couple of trend line touch points here. So first touch point here, second touch point here, and third one here. So of course, legends, we could absolutely get another push up like this, down like this, and we might consolidate and just have a compression and eventually break out. Somewhat like a macro ascending triangle here. So we've got like this resistance here, and you've got ascending support here. So we'll see how that progresses as well. You can see how very often in Bitcoin habits is that it holds above the 382 Fibonacci in strong uptrends, and we're still above this 29.1k region. The first warning sign I would say is if you get a 4-hour closure below this, essentially this 29.1k region, it's very likely we get a trip back down to this 28.9 or 28.5 even region. If we lose 28.5k, then it's very likely you do get a move at least to this tap this trend line, so around 28.1k, potentially the 618 to 27.5k. Whether we see new lows, it's hard to say right now. Always be open-minded, and specifically for investing, the rule of thumb is never be all in and never be all out. You should always have capital to deploy at lower opportunities. Another thing is we have essentially this untapped point of control here, and this one here is a 26.88. So if we lose this low here, then it's very little on the way till 26.9k. So not a lot has actually changed in this sense. And of course, looking at the Gaussian channel, let's kick it off with the 5-day Gaussian channel. We see in Bitcoin history, especially how this is respected a lot. We initially broke down below it here, particularly during the start of the bear market in 2022. Now we regained it here. And then what's interesting is that on the weekly actually as well, you can see how it's starting to turn green. So this is a good sign from a more macro point of view. But that's not to say we can't get a push back down like this and tap the top band, because we actually slightly front run it. So maybe around 28.3k, 28.4k. So we see a lot of confluence in this region. If we go there, we might bounce, and then you might get that push up. But if we lose that, then naturally there's very little on the way till 24.2k. And that's just something to see. Okay, and also, of course, later on in the year, maybe Q4, a lot of people are forecasting this really bearish Q4. And so that might be 20k potentially. We might get another trip down there. But so far, it's still essentially, yes, there's two situations. Situation one is we get push up, regain that imbalance around 30.7k, 31k, and then we might get moved back down to revisit this 28.4k, 28.3k band. And the thing is that there's actually more opportunities in other markets. You don't have to just trade Bitcoin. And I'm actually a crypto, commodities, and equities trader, so I'm in a whole host of markets and also foreign exchange markets. There's so many opportunities. And let's look at the 5-day chart. And here you can see how this 5-day Gaussian channel top band is around 27k. So there's a bit of confluence here again with this untapped point of control. Now let's move on to some wider markets. I also took a short actually on the S&P 500 index, and it's been working out quite well. I shared this setup actually. I also hit my first take profit. My entry was around here, so around 4,520. The reason I took this short especially is we had this baseline support here, so around 4.5k. Then we broke below that, and then we back tested it. So I shorted like a supply zone, and so my first take profit has been hit around 4,470. And the main thing to essentially hold is this 4.3k level, at least, because it was a key area of support, really, this 4.3k on the way up. So on the way down, if we break below that, there's actually very little on the way to go much lower. And so, I mean, looking at the higher perspective, you can see on the weekly chart, just to illustrate this, the weekly chart, we're still in a uptrend. The daily chart, it's still an uptrend, actually, essentially, as you go push up, push down, push up, push down, push up. But then the 4-hour is starting to show a bit of cracks. You can see how we're starting this lower highs and lower lows. So we'll see how this goes. I actually noticed that the NASDAQ, so it's essentially the US 100, how it actually gives a lot of clues for cryptocurrency. And this often gives clues in advance. We can see how I actually missed the short. I was a bit overexposed in my portfolio, so I didn't want to take on this risk. But you can see how we had this weekly uptrend. But in the 4-hour, we've actually been in a downtrend for a long time. So question is, if we get a bounce in the NASDAQ here and maybe regain some of these imbalances, then that might lead to a pop-up for Bitcoin. And then we'll see if we actually continue. I think the NASDAQ could have a pop-up and then potentially get another trip down to this 14.8k region. This is something else I'm looking at as well. Looking at certain key Fibonacci as well. It seems that a lot of markets are hitting key Fibonacci. So if you draw one from here to this point here, yeah, so we've actually now just slightly front around the 886. We actually get to the 786 here. Looking at other things, so effectively the Dow Jones, so the US 30, you can see how similarly the US 30, if you draw Fibonacci from here to the lows, it's also slightly front around the 886. So the question is, do we get something like back previous history with these indexes? So you can see how even here we actually had this dump here, push up like this, and this was brutal. This was a push down of 20%, and then we had a bounce, and then this move here was almost double this incline, and this trend happens a lot of the time. The only thing is nowadays a lot more social media back, and so a lot of people do forecast really bearish news, and very much really focus on the echo chamber. So you have to also really look at the charts, because a chart tells a story. But of course, you need to look at these news once in a while to get an overall bias and understanding of the common retail, what they're thinking. Gold has been in a downtrend. Someone actually, interestingly, I think it was Crypto Tiger actually in the community, he mentioned how this could be start of some sort of head and shoulder formation. So right shoulder here, head here, and then shoulder here, some kind of macro formation. That was interesting. But I think it is still possible to get another tag of the highs around 2.2k later on this year, potentially. But in the 4-hour chart for gold, it has been in a downtrend. But now we are coming down to a key area of demand. So this might be a bounce region for a bounce trade. It's definitely set up. I keep speaking about this, but in 2018, something interesting happened. So in the gold chart in 2018, this is just something that I'm watching out for. So what happened was we had this peak here, another peak here, another peak here, and then we got that final liquidity grab, and then we dumped quite hard. This dump here was essentially a 14% dump. So that was, for gold, that's quite a lot. So looking at the oil chart, this was a setup that I spoke about. And we had this key resistance here. So this weekly level around from 12th of April, 2023. I actually missed the short. I entered a limit here, but my limit order didn't get filled because for some reason my platform MT4 for this was playing up a bit. But unfortunately I got other shorts. But this is an example of a false breakout trade. Initially we had this push down, push up, and then false breakout, move back in the range. Then a lot of us were wondering whether this was just an SR flip, but it eventually just broke down. So that's just a nice, if you got into the short, which I pointed out, you would now hit take profit 1. Then looking at other things, so look at the total crypto market cap is very important to look at. Looking at the total crypto market cap, we're still stuck in this roughly 1.14 trillion region. I have my Black Swan event box around here, so from 450, 500 billion to 750 billion. This is a key area of support. There's no guarantees we're going to get there at all, but you can see how I don't expect us to go above this 1.26 trillion region anytime soon around this resistance. And we have a long way to go. We're still in no bull market quite yet. It's very important to, of course, compare your spot positions evaluation towards Bitcoin dominance. Because yes, the dollar value of your spot bags of altcoins might go up, but it could be losing Satoshi related to Bitcoin. So looking at this, we have a couple of touch points. We have this first touch point here, second touch point here. So I would expect to move back up to this 57, 56%. It's just a question of when. And we're just consolidating here. And it's just hard to know exactly. As I mentioned before, a lot of people have only been in crypto since here. So they don't actually know what a 52% Bitcoin dominance looked like. And when it happened here in 2019, this was brutal. It really affected people's altcoin positions. But guys, this is all I have to talk about in this quick market update. Do check out my YouTube channel. This is where I post my passion for crypto and trading and really tips and tricks to really fast track your trading career.